Are you somebody that wants to start buying rental property and start using bank financing, but you're not really sure what goes into it or what affects your monthly payments or cash flow? If so, this video is for you. And we'll talk through three key factors that will affect your payments, your cash flow, and what the financing looks like with the bank. Now, you may notice I'm not in my studio this week. I'm in my vehicle. It's been pretty crazy. So still wanted to make the video, just are not in the studio for it. And so let's get right into it. Whenever you're using bank financing, there's a lot of important things to consider, especially as it impacts your cash flow, what the bank terms are, and what your ultimate note's going to be. So let's go through those three now. So the first one that will probably have the biggest impact on what your monthly note will be with the bank is your interest rate. Now, if you're watching this in 2024, interest rates are a bit crazy. They're very high, and it can really put a strain on your deal as far as cash flow and revenue is concerned. And so it's really important to understand not only what the actual interest rate's going to be, but if there's an option to reduce it or shop around to see if you can get the best rate as you can. And so that's first and foremost. The second thing that'll really affect your deal and what the payments are is your down payment. So, if you've heard what most folks have heard, and myself included when I first got started, is that you need to put 20% down with the bank as your portion of the down payment. Now, that is definitely the case with a lot of banks, but it is not the only rule. Some banks require 15%, some are 10. Some banks will not require any down payment if the deal is good enough and there's enough equity, meaning that once the bank loans you the money to buy it, there's still some equity there that they can put up as collateral, so to speak. And so really understanding your down payment, not only the cash that you'll have to bring to closing, if any, is also understanding how that'll impact your note. So usually the more money you bring down, the less your payment will be each month. And then lastly, which may be the most creative or potentially the most important as far as the terms of the deal. And so that is the loan terms. And so when you look at a note or a mortgage with the bank, they'll have terms associated with that. How long it is, whether it's for a 30-year amortization, 15, 20-year, these will all impact how long your note's going to be and how much your payment's going to be each month. Good rule of thumb is the longer that you push out the note, the lower that your monthly payment will be. The trade-off with that is, of course, you're not paying as much to principal each month, but if you're investing in real estate for cash flow, which I highly recommend, having a longer note will increase your monthly cash flow. And also something to consider is your tenants are ultimately paying off your mortgage because they pay rent every month and you use some of that money to pay your bank note. And so some of the other terms that might be less obvious than how long the mortgage is going to be is how soon can the bank close? What are the terms as far as closing costs? Can they wrap that into the loan, or do you have to bring that to closing as well? Will the bank include the appraisal in your fees, or do you have to pay that out of pocket? These are a lot of great questions to understand when you're going to get financing, because all banks do things a little bit differently. And so what I would encourage when you're looking at financing is not only to understand what the interest rate's going to be, what the down payment requirement is, if any, in the loan terms, but also working with small local banks. That is the route I went. I chose to work with community banks and get commercial loans. A lot less red tape than government loans like FHAs and some of those products. Not to say that they're bad, but there's just more steps involved when you get to closing. And so those are three things I would start with, especially if you're new and understanding how the bank financing works. And so I hope you found this helpful. If so, if you're somebody that has a full-time job and you're looking to get started in real estate investing, consider subscribing to the channel and liking this video. Each week I cut videos about exactly that, investing in real estate while having a full-time job. And definitely check out the video on this screen that I shot last week. And I will catch you on the next one. Appreciate you watching. Bye for now.